And maybe Daimler's using the trade story as a little bit of an excuse, but you are starting to see companies talking about the idea that this is actually already turning into something that's real. And regardless of kind of where we finish up, in the meantime, sentiment is affected. Companies have to shift their kind of approach to how they deal with consumers. Consumers are going to be rethinking maybe which cars they buy, which cars they're thinking about buying. So the effects become real earlier than when we get to the end game.
Yeah, absolutely. I think sentiment is certainly the most obvious and speediest means by which this can start to have an economic impact. Exactly as you've described, these things are self-fulfilling. John Maynard Keynes talked about this many, many years ago with respect to birds outside the shop. If you believe they're bad for business, you'll behave in a manner which means that becomes self-fulfilling, and the same is true here. And we know that the auto industry has now got incredibly integrated global supply chains, and so that seems an obvious place for there to be problems, shall we say, with this tariff and the costs of the business. You've got to remember also that there are margins, business margins, which can take some of the hit, and they have over the post-crisis period in aggregate been quite wide. So there is some room, certainly in certain sectors, for them to take the hit. And we also need to think about price elasticity of demand. If a BMW goes up from £30,000 to £33,000 here in the UK, does that have a meaningful impact on consumer demand for that pretty high-end sort of automobile? I'm not sure that they're uber sensitive to those sorts of price moves. So, of course, it is a complicated story, and when you see Daimler saying that they expect to see a hit to their bottom line going forward, you need to take that seriously. But I still think that from a macro perspective, from an aggregate economy perspective, we're talking relatively small magnitude. You know, I've seen estimates of 2 to 3/10 cumulative GDP at the Chinese end. Well, they're growing at 6.5%. That's actually quite a small percentage of their overall growth. And the US is a relatively closed economy with a great ability for import substitution. So I don't see a huge hit there. There's going to be winners and losers sectorally, of course, though.